Peter, let me start with asking you about the expectations from the OPEC members meet. Do you think that countries like Libya and Nigeria could be roped into the compliance agreement, especially Nigeria, since they said that they'll toe the line post reaching a critical mass of around 1.8 million barrels?
Well, good morning and thanks for inviting me on the show. Yes, I do think that there will be some concessions from Nigeria and Libya. We're still 2 and a bit months out from that meeting in Vienna, the end of year one, which is the major meeting. Yeah. So in turn, there's been wonderful compliance demonstrated over the last matter of months, and there is no doubt that OPEC will probably, I think, increase the longevity of that of those cuts for a further 3 months at least, till March 31 next year, and it may even roll it further forward to even mid next year. The overhang is certainly a big number, and they need to wear that through the market, and the only way to do that is to cut production. So in turn, the likes of Nigeria and Libya, whilst they've been able to ratchet their numbers up, and it's been very effective and strong for their balance sheets, they've also got to appreciate the overall body of OPEC and what they belong to. And so in turn, I think that there will be some uniform cuts and uniform playing the game together. So that's what I'm expecting to come from the meeting.
I'll just take some more questions on crude oil first. What's your outlook on WTI? Because post Hurricane Harvey and Irma, we saw some part of that Gulf Coast production going off stream. Yes. But then there was a sudden spike that we saw because the refinery capacity went down at a sharper clip. The discount is at $5 almost. By when do you think this could normalize, and do you think a greater recovery could come through on WTI over, say, a 3-4 month period compared to Brent?
Well, I think first off that as far as a normalisation, yes, it'll probably start to narrow over the next couple of weeks. I wouldn't be surprised it's $5.50 at the moment or close to it, which is very, very wide considering that the price point, if it was $100 a barrel, $5, it's understandable, but at 10% of the price, it's a fair bit of a discount or a premium to each other. And in turn, probably that will wear off the market I'd say sometime mid-October, but that's dependent on a couple of things. First off, geopolitical. Secondly, if we have any further hurricanes, we're still 2 months away from the end of the season. And we've got further hurricanes building in that Gulf, and it's going to be one of the worst seasons on record with the likes of Harvey and Irma. So in turn, if you have those weather outages and disruptions, that's going to greatly affect the whole basin as far as, the Texas and all the way across the Gulf. So that's something that needs to be worked through and understood. The other side, of course, is geopolitical, what happens as far as North Korea, and that's always an uncertainty. So whilst we're seeing increasing demand coming from Brent out of Asia, the other side of it is what happens as far as weather outages or other issues that can greatly impact WTI in the short term.
So overall, if you talk in terms of oil, Peter, currently if you go to see in 3 months, oil prices have gone up by almost 10 to 15%.
Yes.
Do you think countries will be compelled, or they will be looking at increasing their production rather than cutting it the way oil prices are panning out now?
Well, it's also got to be taken into consideration. In the last few months, we've seen a fairly solid sell-off as far as US dollar as well. So, nothing to the likes of 10 or 15%, but it was probably oversold in some ways. That Brent coming down to 48 or 49, WTI running at around that 50, around that 45, 46. They've bounced strongly, and the likes of it, if you look at these major hedge funds and money managers, they go in cycles, and there have been many cycles demonstrated since the start of 2014, and in a lot of ways this could just be another cycle in the sense of stacking of positions, rolling it forward, and then all of a sudden you'll see a big sell-off come in the next matter of a week or two. So whilst I think that you're probably going to see a little bit higher pricing, I think the volatility is certainly going to be here to stay.
Right. What do you feel about the dollar index and thereby the correlation to industrial metals as well? Because we've seen the dollar index, yes, it has strengthened a bit from that 91 level, but by and large, on a longer term basis, still very, very weak compared to 104 where it was in January.
Yes.
Base metals have been on a tearing rally. There was a brief pause in the week before last, but we've kind of resumed again. What's the outlook there?
Well, if you look at that, and you think about copper, I just use that as a great one to demonstrate to the market. It's up a best part of 45% in the last year, from 4,400 to about 6,600 a metric tonne. Now that's a huge increase, and there is no doubt that will possibly continue. It's still relatively cheap. Aluminium's been on the back of that as well, a number of the other base metals. So in turn, there's probably plenty of upside because it's still relatively cheap compared to what it was many years ago. So I think that whilst the US dollar may have had a little bounce and there's talk there of those hawkish undertones as far as Janet Yellen, the other side, of course, is if the Fed are prepared to raise rates, that could force the US dollar up a little bit, that dollar index in the short to medium term over to Christmas. But overall, I think that there's more upside for the base metals. They'll start to continue their rally, increase their volatility, but I think they'll be stronger up for the upside.
But your pecking order will have copper on the top.
I think that's pretty hard not to, in the sense where you look at the aluminiums, the tins, they're up, the best part of 35 to 45%.
My question is because steel demand is also looking up and steel pricing is looking up. So probably you would want to look at zinc or maybe something like a nickel for that matter.
Yeah. Absolutely. And I think that there's probably, the great storylines for those, but I think overall from a trader's perspective, if they see copper up, and that's a wonderful barometer for the general world economy, then that'll drag the others up as well.
Right. Let's speak about gold also for a bit, because now we are below 1300 and we've cooled off quite a bit. Do you think there's more downside to it? Because after the FOMC commentary, we've seen a sharpened...
Well, that's the thing. I mean, that's the great point that we saw. It was 1365 going back to about the 9th of September. So we're 12 days later and it's down the best part of, 5.5%, 6%. There's probably further downside in the short term. But the other side of it, of course, is if that US dollar does get a lift off, I think gold's going to have a 1250 handle written all over it, quite simply because US dollar strengthening, and if we see another rate rise, the other side, of course, that you need to consider is the geopolitical. And that's not going away, and President Trump's rhetoric as far as Rocket Man and so on, that really puts a little bit of powder keg to the global, risk-off trade, and gold may be the market for that to get a little bit of upside. So it's at the moment, and that just shows us, I think, really that the demonstration as far as geopolitics versus weaker US dollar versus Yellen's comments and all of that rolling into the pie. You've just seen gold have a nice sell-off, and again, wonderful for traders.
Right. So overall, we just spoke about the dollar index as well. We are seeing some bit of strength that's coming in on the yen as well. We saw 112 versus the dollar. What do you make out of this? Do you think you could see further strength coming in there?
I wouldn't be surprised. A bit of further upside. I mean, the yen's had a great run. It's been a fantastic trade, and all of the retail land have been all over it, from Mrs. Watanabe all the way back. So I think that you've got further upside. It's a wonderful trade in the sense where very huge liquidity, but not only that, big volatility swings, and that really is the attraction with it. So I can't see that storyline really losing any of its flavour or any of its horsepower in the short to medium term. Probably stronger from here.
Right. What do you feel about other Asian currencies also? Because, generally over a longer term time frame, we've seen that be it the Korean won or the Taiwanese dollar, even the Malaysian ringgit and the yuan have been beneficiaries of long inflows. And the rupee, in fact, in yesterday's session depreciated quite sharply.
Yes.
So do you think that there's a near-term correction that's overdue and that we might see across the board for some emerging currencies at least?
Well, you might. I mean, it depends on how high that US dollar's got the potential. I mean, any market is considering the US dollar falling 11 or 12%, nearly 1% a month since the inauguration, or since January. It's now only the end of September. It's fairly solid if you look at it on a graph. So there's possibly it was oversold and you might see it bounce. And then again, those commentary coming out, inflation isn't really a concern. And the other side, low unemployment numbers coming out of the States. So all of those considerations need to be thought through. And the upside is going to be if the US does have a rate rise come that December point, and they do have another one come February or March, then I think that's going to be enough to underpin the value of the US dollar index, and in turn a lot of those other currencies will probably come off a little bit. They've had nice run-ups. As far as the Indian rupee, it's fairly, when you think about it, I think it's fairly range-bound. It hasn't, fallen out of those long range.
64, 65 is
exactly.
something.
And sometimes you roll your mind back a year, and I think it was at 67.5 or 68. So it really hasn't had big swings compared to something like the Aussie dollar that's gone from 68 or 69 to 80, or the US dollar, that 103 down to around about 91 in the same time. The Indian rupee has been, I think, very contained and hasn't been overly volatile.
Right. And apart from that, if you talk about where Asian markets are concerned, yesterday we had S&P which came ahead and downgraded China. Today we are hearing S&P is downgrading Hong Kong as well. Do you think it could have a major impact?
Well, it's not a good thing. I mean, if you have those little bits of downgrades, it just comes down to what your forecasts are moving forward. The IMF downgraded, your GDP numbers coming out of India as well. So, that's you were running there at around about 8.5%. You're now running at that 6% number. So it's not unusual. Remembering that we've got low inflation, we've also got low interest rates globally. So you can't have both. You can't have those big growth numbers if you've got relatively contained or lower interest rates and lower inflation numbers. So it's putting it all into some sort of context. That doesn't surprise me, and considering that both China and certainly Hong Kong have had great property market growth over the last 5 to 7 years, and if you look at the other side, of course, is they're both very, very strong economies, and you've only got to see their equity markets. They've had nice upticks, so it's part and parcel as far as the big picture, and sometimes we see those. I suppose those forecasts coming forward from S&P and so on.
And lastly, before we let you go, Peter, would like to ask you about the euro, because that has the biggest weightage on the dollar index. We've seen a constant strengthening play out, and who's to tell when a material commentary or at least an initiation on some adjustment on the balance sheets might come through from the ECB, because that's only a matter of time as well. So do you think that the euro is likely to remain more resilient, or do you think that 1.2 is the near-term ceiling?
Well, I think 1.2, I think it's got the potential to go a little bit higher, but the other side, I don't necessarily in the short term see Draghi's taking his foot from the accelerator. I think it's probably he's wants to maintain those growth and to get the overall economy moving forward. You've got large overhangs as far as unemployment. You've got youthful unemployment, large, big numbers. So in turn, he's got a different agenda, I think, to the US. They're going to be in this cycle longer as far as their form of quantitative easing. So that's the situation going forward, which in turn I think is going to possibly hold that euro level, maybe 1.2, 1.21. It's been a great trade for retail.
Right. So 1.2, 1.21 is something that we could look at.
Okay. And once before we just say goodbye to Peter, he's a big cricket enthusiast.
Yes.
Australia was beaten for the second one-day yesterday. So.
And you guys are gaining momentum. There's no doubting that. I mean, 2-0. I'm a little bit surprised, but you guys were too strong, and I think overall, you've got to go into the third test as clear favourites, or third series, and I think Australia is going to be very hard to win a match. I really do. You guys have got it at the moment. You're just flying.